All right, let's dive into Albertsons Q2 2025 earnings. This report just dropped and wow, it didn't just nudge the stock, it sent a massive signal to the entire market.
And yeah, the market's reaction was anything but subtle. It was immediate, it was decisive, and it was overwhelmingly positive. This was not your typical quarterly update. This was an event that completely changed the story for this stock.
So get this, on October 14th, the day of the release, Albertsons stock, ticker ACI, just skyrocketed 12.4% in one day. For a company in the grocery sector, which is usually pretty steady, a double-digit pop like that really makes you lean in and ask what's going on.
So what was the rocket fuel here? Was it just a simple earnings beat, or was there something much bigger at play under the hood? Let's break it down.
First off, just look at this volume. We're talking nearly 20 million shares traded hands. That is triple the normal 3-month average. This tells you it wasn't just small-time investors getting excited. This signals big-time institutional conviction. The large funds, the big money managers, they were buying in, and they were buying in heavy.
Okay, so now let's get into the actual financials. This is the core data that sparked all that conviction and drove the huge buying spree we just saw. On the surface, it was a really clean beat. Adjusted EPS came in at 44 cents, which was nicely ahead of the 40 cents everyone was expecting. Revenue also edged out expectations. All solid execution for sure. But these numbers alone don't typically justify a 12% rally. The real story was somewhere else.
And here it is. This was the bombshell. Management announced a massive $750 million accelerated share repurchase, or ASR. This was the primary catalyst that just lit a fire under the stock.
And that ASR is just one part of a newly beefed up $2.75 billion buyback program. That is a loud and clear signal from management to the market. They're basically shouting, we believe our stock is deeply undervalued and we are putting serious cash behind that belief. But listen, a buyback alone doesn't make for a great long-term investment. It's got to be paired with a real, credible strategy for the business. So let's look at the story management is building, which they're calling a new day for Albertsons. The new CEO, Susan Morris, used the earnings call to set a completely new tone. This quote right here really sums it all up. It's a shift from playing defense to going on offense, focusing on bold moves and a clear mission for growth.
And you know what? That growth is already showing up in two huge areas. Digital sales surged an impressive 23% year over year. Their e-commerce strategy is clearly working. At the same time, their pharmacy sales jumped 19%, thanks to things like the new weight loss drugs and just plain old market share gains. These are the twin engines really pushing the business forward right now.
And supporting all of this, you've got 4 key pillars. Their loyalty program is swelled to 48 million members. I mean, think of the data that gives them. They're using AI tools to make the customer experience better. They're smartly using their huge portfolio of owned real estate, and it's all being paid for by a $1.5 billion productivity plan. It's a really comprehensive, believable strategy.
So, with a strong quarter in the bag and a clear strategy laid out, what does management see for the rest of the year? Let's turn to guidance and see how this all builds into their plan for shareholder returns.
Well, the strong quarter translated directly into a guidance lift for the full year. They tightened up and raised their forecast for sales, and even more importantly, they boosted the outlook for adjusted EPS. That tells us they expect the momentum they saw in Q2 to keep rolling right through the second half of the year. And here's how all the pieces connect. That raised EPS guidance gets a direct supercharge from the share repurchase. Management said it themselves on the call. The ASR is immediately accretive to earnings per share, which provides a direct, tangible financial boost for every single shareholder out there.
Okay, so putting it all together, what's our take? And what should investors be looking for when the company reports again next quarter?
For our next call watch list, we're zeroing in on 4 key things. First, we want to see progress on executing that massive ASR. Second, how did sales do during the crucial holiday shopping season? Third, is that explosive pharmacy growth sustainable? And fourth, we'll be watching to see if those cost savings start to actually improve their profit margins.
Based on everything we've seen this quarter, our rating on Albertsons is outperform. The combination of a clean operational beat, confident raised guidance, and that huge, immediately accretive capital return program, it just creates a really compelling and de-risked setup for the stock. Ultimately, it feels like Albertsons has shifted its story from a defensive one to an offensive one, making it a really compelling name to watch. And finally, just a quick reminder, this is not financial advice.